Hi, everyone. Welcome back to the Investipal podcast. Today on the show, we're joined by a true industry veteran, John O'Connell. Your career has spanned more than 30 years across emerging startups all the way to established global enterprises. I'll let you explain your background a little bit, but John's background spans Merrill Lynch, KPMG, running I think you just mentioned to me, a 60 plus person sales team at Oracle, but you're now the founder of the Oasis Group, one of the leading wealth management consultancies, helping RIAs, IBDs, asset managers build out the tech stack of the future. John, I'm so glad to have you on the show today.
Cam, thank you so much for having me. I really appreciate it.
So, interesting background. I'm curious you could walk us through how you got started and then what led you to creating the Oasis Group.
Thank you. So I started my career as a developer, believe it or not, back at Merrill a million years ago. From there, I went to KPMG, Pete Marek, and then at one point and KPMG at the time had a really successful suite of mainframe applications that we were bringing down a client server. And then at one point, I was traveling a lot with KPMG, going out to clients and explaining what the software did and how it did it that way. And someone said to me, you'd be great in sales. And I wound up leaving KPMG and going into sales. And then that's really how I got the start of my career. And I've been in either a consumer of technology, because I was at Merrill twice. So I went back and ran finance systems there for a little while, but I was either a consumer of technology or I was a seller of technology in the financial services industry my entire career. And I always had a great love of the wealth management industry. Much of the work that I did at Merrill and then at firms that were working with Merrill was around wealth management. So I created the Oasis Group in 2019, and we focus exclusively on the wealth management industry, where we help firms to select technologies. So we'll do everything from how they gather their data, which is going to be everything from lead to annual meeting, how they secure their data, which is cybersecurity, how they own their data, that's going to be data lake, data warehouse, and then how they mine their data, which is going to be analytics on top of that. And now AI is pretty much embedded everywhere in there. So we're doing a lot of that type of work as well.
So that's a good segue. There's a lot of chatter online, and I always find it interesting watching LinkedIn and seeing everyone talk about how uh, AI is such a novelty in the wealth management world, rather than looking at like what else is going on in like adjacent industries. Um, Diving into the Oasis research report, curious if you could share some of like the findings on the next evolution, what you guys are seeing firsthand in the technology space.
Absolutely. Thank you. So thanks for mentioning it. I mean, we do quite a bit of research within the Oasis Group. A lot of that research we publish for free, and then there's some research that we publish where people pay for that. So we did a free white paper, for example, on ChatGPT versus Microsoft Copilot. Which one is better for you from a security perspective as a wealth management firm? We did a research study on AI note takers, where we took a look at we compared the top 6 AI note takers across the industry to take a look at their capabilities. And then we just published a report actually last week on wealth platforms, where we took a look at the top 10 wealth platforms across family offices, RIAs, IBDs, and asset managers, and then compared their capabilities. And what we're seeing is this really interesting move. So you're seeing the note takers, which I can't even call them note takers anymore. Now I would say they're more like a wealth management sales assistant, because they're doing everything from they're adding features now, such as a light CRM. They're adding meeting preparation. They're adding the meeting recording and transcription. They're adding action item integration to CRMs moving forward. And there's some of them now that are even building out workflows. So if your CRM doesn't have strong workflow capability, and there are some that don't, you can just use like the meeting, preparation software to be able to do that. And then on the wealth platform side, we're seeing some really interesting things happening, right? So, for example, Advisor 360 bought Parrot AI, and they're going to be integrating those AI capabilities into their product. You've got firms like an Allocate Right that have a Newt product that they've implemented now in there, a large language model that they've implemented inside of their product. So I think what we're seeing in the industry and what we're going to continue to see now for the next 2 years is we're going to see these lines blurring between what was traditionally, I have a CRM, investment management, financial planning, we're going to see those lines blurring pretty significantly. Look at firms like a Quinn or like a Conquest Planning, one of your friends up in Canada, the Conquest Planning team, that I think has done a really, they're implementing AI inside of financial planning. So I think you're going to see the lines blurring from a functionality perspective, like what we talked about with what we would have traditionally said note takers, blurring into CRM, blurring into account opening. And you're going to see the traditional wealth management platforms try to integrate things like note taking and AI capabilities in their platforms. So it's kind of I know it sounds trite to say it's like an AI revolution right now, but you're going to see more and more firms adding those capabilities into their software, primarily because the workflows today that wealth managers have are so people intensive. And we push a lot of paper around in wealth management that you're going to just see a lot of technology try to streamline those processes moving forward.
Couldn't agree more. Um, on that note, there's news out. I think it was this week, if not, it was last week, that like Claude, for instance, and we've seen it with Perplexity as well on like integrating. Um, you could integrate like your Cap IQ or your Morningstar and drive inferences using like a $20 a month subscription. Obviously, you'd have to pay for, I'm assuming, Morningstar to get like the data. But do you see dedicated wealth management tools being eroded and being replaced with something more broad like an OpenAI, ChatGPT, or a Claude?
I think you are going to see some of that. So, for example, I published an article where I used Anthropic's Claude to run a Monte Carlo simulation with 21 different variables. I did 5,000 iterations. Most of the financial planning software do 10,000 iterations. Just replace the 5 with a 10, and it'll do it for you in a few seconds on your computer. So I do think that you're going to see there's going to be this whole host of DIY that you're going to see from folks out in the industry. So think of all of the sons and daughters of your high net worth client that don't meet the minimums today of a wealth manager. That's dangerous for the wealth manager's business, because what you're going to find is when mom and dad pass away, which is inevitable, you don't have a relationship with the kids, and the money's going to move. It's just going to leave your firm, right? So I think that the movement with AI and with better streamlining and more personalization is going to enable wealth management firms to continue to lower their minimums, continue to engage that next generation of client, and then continue to really engage more of that net new millionaire that's being minted in America. So, if you think of the United States market for a moment, we mint the second largest number of new millionaires every year behind United Arab Emirates, right? So there's a lot of new people that are clients, potential clients for wealth managers, and we just cannot keep up. Some of that is not enough people entering the industry. A lot of that is problems with the workflows that wealth managers have. They're not efficient. So it's
Mhm.
really difficult for them to take on more clients. That's why when you talk to many wealth management firms, especially in the RIA space, you ask them, how are you growing? They're like, I'm still growing through referrals. It's like, okay, you have no marketing program. Like, you're not out there looking at all these other folks. So that's problematic just for the industry in general. And I think what we're going to find over the next couple of years is a tale of two cities. You're going to find wealth managers, forget whether you're RIA, IBD, family office, just let's say wealth managers. You're going to find wealth managers that are embracing AI and new technologies and new workflow capabilities that are going to enable them to touch more clients in a more personalized way, more efficiently with the same number of people they have. That's going to be the winners. Then you're going to have the losers. And the losers, unfortunately, are going to be the folks that don't pay attention to the technology, you know, uh, the technology improvements we're seeing, that stick to the old workflows and still feel like they're going to hire more people to do the work that they need to do. And that's going to be, I think you're just going to see these winners and losers. It's going to become much more obvious over the next couple of years, those winners and losers.
And so I know when you mentioned DIY, you meant DIY investors, but if we think on DIY tech stacks, do you think, or are you hearing now from like the firms you work with? that they're now exploring building their own solutions out for their own problems rather than buying like a technology vendor's product?
We're definitely seeing that in the asset management space. There are more asset managers and TAMPs that are out there building their own technology stack, and there are quite a few of them right now that are looking to use artificial intelligence to build those quicker, right? So, if we digress for a moment, right, you can literally design something in Claude and tell it, go build me the Python code around this, and it'll do it very, very efficiently for you. So we are seeing people do, for example, where we're seeing the most of this right now is in the asset management space. We're seeing it kind of everywhere. In the RIA space, we are seeing people develop their own front ends to technology. So, for example, we're seeing some folks that are building a custom front end to document sharing capabilities. They're building a custom front end to SharePoint, a custom front end to Box, and they're beginning to explore the DIY development capability with simple things like, just build me a front end that'll enable folks to upload documents into a secure document storage that I already have, right? They want it to be branded for them, so that we're seeing that. You're going to see more and more of that, Cam. I mean, the fact that I can run a Monte Carlo simulation using Claude, and very quickly you're going to see more of that. You're going to see more people that are saying, "Hey, I've got all these documents that were uploaded from my client. Can you interpret those documents and interrogate them for me?" So think of like an estate document, right? Estate documents are not formatted the same, right? They're always different. There's AI is extremely good at being able to pull out specific information about that estate document. Show me who the beneficiaries are. Show me who the trustees are. Show me the percentages. Show me, and it'll pull all that information out really efficiently. So I do see more and more of the DIY, but they tend to be in these smaller use cases, front end, document interrogation, things like that. And I think that will begin to erode some of the niche solutions that we're seeing in the marketplace today. And those niche solutions are going to need to evolve, right? Otherwise, their life expectancy is going to be shorter.
Well, yeah, you mentioned it before, like the meeting note takers. Now, every web-based platform, some of the CRMs are launching their own note takers. You see that them taking on that evolution now. I couldn't agree more. And is is that the same for like the? I know you don't focus yourself on this market, but like the independent RA doesn't have a CTO or a dev team. Are you seeing them approach that tech stack build differently than like the larger RAs?
I think that right now, not yet. And I'm going to say not yet because one of the things that we're seeing in the independent RA space is tool rationalization, right? They want to have less technology that's more tightly integrated. So I think what we're seeing at the moment in the independent RA, the breakaway space, if you will, is let me rationalize my tool set down to what I'm actually using, right? Um, in a lot of cases, they've gone out and bought a variety of other tools that were niche, like they were servicing maybe 20% of their client base or 30% of their client base. And now what they're finding is they're spending $200,000, $300,000 a year in technology costs. And that's not just the licensing, right? Because we're always like, hey, it's licensing plus. Remember all those people that are doing all this stuff? Like, you got to count that number too. So they're spending $200,000, $300,000 a year supporting a technology stack, and they're just not getting the return on investment. So we're seeing those independents kind of rationalize those tech stacks down. What we're seeing in the mid-market space, so figure like that 500 million to about 1.5 billion in AUM, those are the folks that are beginning now to say, well, can I use artificial intelligence to integrate some of my products, right? That was what I would have called before the Zapier crowd, right? Those are the folks that were using like Zapier in between these applications. Now we're seeing them say, well, instead of that, why don't I go out and build a quick AI agent? So they're using some of the agentic platforms to build AI agents to move data between one system and the other, as opposed to a Zapier connection. And we're seeing a lot of that in that 500 to about 1.5 billion RIA space. And then, of course, in the enterprise space, you're just seeing them build full on tools to do these integrations. And we're seeing those folks starting to implement complete AI workflows. We haven't seen the big jump into the agentic space yet. We're just seeing that kind of in the integration. But you and I both know that's coming pretty soon. Outside of our industry, agents are doing a ton of work. Inside of our industry, we're a little bit slower to move yet. But if we see what's happening outside the industry, that wave is coming really quickly.
100%. Yeah, I couldn't. Mum's the word on what we're doing, but I agree with you. Do you see then that that edge that the breakaways have had value prop wise versus like a bigger firm being eroded now because they have more resources available to them to like build out more efficient tech stacks or workforces?
I think that the niche players, those breakaways that have a really good value proposition, a really good understanding of their ideal customer, are going to do better than the larger firms. And the reason I say that is the larger firms are building for scale. So they're trying to enable tons and tons of advisors that all have different little value propositions, right? Take the firm, like I'm going to give you a really great example. There's a firm that we're working with right now that works primarily with anesthesiologists, CRNAs, like really niche. They're going to be able to generate much more content relevant email marketing to potential clients. They're going to generate their market commentary is going to be geared much more towards the challenges that that particular set of people have, right? So, for example, when you get a CRNA or you graduate as an anesthesiologist, you go from making like nothing with a lot of student loans to making a ton of money, right? And they want to enjoy life, so they've got lifestyle planning that they're going to be doing. They have debt reduction that they're going to be doing. They're going to have legacy planning that they're going to be doing. So there's a set of very specific services that are driven because of that niche, right? Your financial planning is going to be geared differently. The email communication that you're sending out on a monthly basis with market commentary or just touch base points is going to be geared towards that niche really strongly. So the breakaways, when we work with breakaways, we say to them, look, it's great that you've broken away. You need to let's get a tech stack up for you. That's fine. Now you need to begin thinking about what's going to be your market niche. Why are you different from the other 7 RIA firms that are in your zip code, right? Like you've got to be able to differentiate that in that way. And what we find is the ones that are differentiating in that way, even if they have a larger player in their space, like they could have a larger player right down the block, they're going to generate a higher propensity of win on their target customer than the larger player because they're just really good at that niche. So I do think that the breakaway space is going to stay vibrant. It's going to stay vibrant.
I think what's interesting too, we're starting to see like the custodians who support them, like an Altruist, for instance, launch their own suite of software. So I'm curious, like, do you think that innovation now is happening at these like typically very legacy providers, like a custodian, to support those breakaways?
They absolutely are. I mean, if you look at the wealth platform research, if you look, so we published research in Q3 of last year on custodian platforms. And one of the quotes that I had coming out of that research that was picked up by several of the press outlets was, if you're a single custodian RIA, you probably don't need a wealth platform. Like the custodian platforms are now offering trading and rebalancing. They're offering digital account opening. They're offering onboarding. There's so many RIAs today that still use a wealth platform, but then do all their account opening on the custodian platform, right? Custodians recognize that. You know, Altruist, who you mentioned, acutely recognizes this. Schwab acutely recognizes this. Trade PMR acutely recognizes this. So what you're finding is that those players are investing pretty heavily on their front end and enabling it, making it easier, if you will, for the independent advisor, the RIA, or even a broker dealer, an independent broker dealer, to be able to use their platform directly. So I do think you're going to see significant innovation happening in these custodian platforms, and it's going to generate this race between custodian platforms, wealth platforms, and these emerging technologies to basically build out features as quick as they can, because that's what's going to generate more and more market share.
So on this AI topic, there's a story I saw last week where someone was doing it was in the asset management world. They were doing like a research report on a company, and ChatGPT returned back some confidential information, and that person quizzed GPT to inquire where did they get that information from, and it turned out someone at that company was using ChatGPT with internal non-public material information. So on that note, obviously, that's for the investment side, not for like client data side. But any advice you could share with firms on wanting to leverage AI and putting in place those guardrails?
Absolutely. Today there's not a lot of regulation out there, right? There's no really great regulatory guidance, in my opinion, on the use of AI. So what's going to happen is firms that have, so all right, let's take a step back. 68% of people admit to using AI on the job. Okay. Most companies say don't use AI on the job. So what they're doing is they're using AI on their iPad or on their phone to because there's no guidance or there's no guardrails set up by the company. So now what you've got is you've got a whole bunch of people who are well-meaning but don't understand the technology that well yet and are now using basically AI on off-channel devices. So if you are a company and you're listening to this and you're a leader of a firm, my recommendation is I highly recommend you create an AI acceptable use policy within your firm. And what that does is it says these are the tools that are acceptable and you're going to have to pay for them. And these are the tools that are not acceptable. And this is what is acceptable to put into AI, and here's what's not acceptable to put into AI. The reality of it is that asset manager that put proprietary information into ChatGPT did not realize that they were using a free version of ChatGPT and that the data that they put in can be used in the results or in training the model, right? So they didn't read the EULA. They didn't understand the very long EULA of a lot of these AI companies. And that's the problem that you get. So you as a leader of a firm, as a CEO or a chief operating officer or a chief compliance officer, have an accountability to your employees to outline for them what's acceptable and what's not acceptable. Like you're the leader of the firm. So if you don't do it, no one else is going to. I highly recommend that firms create an AI acceptable use policy. They clearly outline what they can and cannot use. And look, the cat's out of the bag. People are using this stuff on their personal devices. And if you happen to be a Microsoft 365 customer, Microsoft Copilot is pretty much embedded in everything at this point. Unless you've gone in and specifically turned it off, it's available to your team members. And if you don't have an acceptable use policy, the way that you're going to figure out whether or not they did something wrong is when the regulator finds out they did something wrong, in all likelihood. So you've got to teach them what can they put in there? How do they anonymize a client, right? If you want to use it to analyze a client's portfolio, for example, how do you anonymize that so that the client portfolio cannot be tied back to the individual? And there's ways to do that. You just had to give them guidance.
Absolutely. Yeah, use Investipal, who anonymizes that data.
Investipal does anonymize that data.
And on your 365 note, the saving grace for any C-suite listening to this is that 365's Copilot is still garbage, and there's no risk there because I can't even use it.
Everyone gets that. It's funny too. Like people ask me all the time, what's the best what's the best LLM to use? And the real answer is it depends. It depends on the use case, right? ChatGPT, you'll notice a lot of times gives you a lot of bullet pointed result sets. So if you're trying to ideation, if you're doing give me some ideas, let me drill together an outline. That's a great tool for that, right? Perplexity is probably a better tool if you want to write a blog post or something like that. Claude would be my number one. If you want to go create software code or anything like that, I would take a look at Claude. The new Grok would be a great example of if you want to be able to generate. Yeah, if you want to generate code, it's probably not a bad example of being able to use it, right? Grok famously was giving people some really abrasive result sets in one of their latest updates, and they
Well,
just
it's like a Hitler themed now, right?
Well, and every AI, depending on how you prompt it, you're going to get some really weird results that come out of it. And of course, they had that really weird result that was widely published on X of all platforms. Um, there's what are you going to do, right? I think that again, things like an acceptable use policy, right? You've got to teach your team members how do you prompt something to get an acceptable result set. Um, every one of these models have been trained. They haven't been trained on the same data set, and a lot of people think they assume it's been trained on the entire internet. That's not true. They haven't been trained on the same data set.
Mhm.
So because they haven't been trained on the same data set, you're going to get different results, and you really need to be careful with what comes out of that. And I'm a big proponent of having a human in the loop, right? So what I call the HITL, whatever comes out of AI, you need to have a human being review that to make sure that it's acceptable, and that will avoid things like what you saw coming out of Grok, where the result set. I think a lot of people would look at and say that's not an acceptable result set. And the reason behind that is you got to have a human in the loop, and you got to understand how you're prompting these things. So it's still a little bit of the wild, wild west. I think leaders of companies 100% need an acceptable use policy. They have to have a training day. They've got to explain to people, this is how you use it. This is what's acceptable. And you're accountable for the results that come out of that. If you asked it to write an email and you send that email, you sent the email. You're accountable for that.
It's funny that we coach people on that all the time, but the defaults that we just see in the industry, not in our industry, but just widely used now, is I trust AI fully, which is crazy. And you see that a lot where it's like whatever you generated for me, I'm just gonna hit save or I'm gonna hit send. I've turned my brain off now. Someone else has done the thinking. And that's, I feel like, a difficult thing to walk away from now.
Yes, it is. It is. But we have to. We have to maintain that human in the loop at this point. Because you can't trust the results all the time. I mean, you look at it, there's famous cases right now where AI made up court cases to support a theory, or AI, that's a hallucination, right? If AI makes up a result set, that's a hallucination. Take a look at what we talked about a moment ago with Grok, right? That's a bias, and AI solutions today are still generate a lot of bias and a lot of hallucinations. You need to know how to recognize those. I've written a bunch of articles on bias and hallucinations. How do you recognize them? How do you protect your firm from them? And if people are not educated on the fact that it will generate hallucinations and bias, you'll take what's coming out of it like, oh, well, that's true. And it may not be true.
100%. Okay, John, we'll leave it there. I know you're a busy guy and you probably have to hop, but I could talk to you all day on this. If anyone's interested in learning more about the Oasis Group or wanting to connect with you, what's the best way they could do so?
So we're very vibrant on LinkedIn. You can find John O'Connell on LinkedIn or the Oasis Group on LinkedIn. And all of what I've written, all the articles that we just chatted about a moment ago, you can find all of those on my website under the Insights page. And our website is www.theoasisgrp.com.
And we'll leave a link to the show notes for anyone interested as well. John, thanks so much
Excellent.
for coming on.
Ham, thank you so much for having me. This was a great chat. And you and I could talk for hours. So I appreciate it.
Of course. Okay, bye bye.
Thanks. Bye bye.